In this video, we asked the best second-year trader that we've ever had at S&B address our newest intern class. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, one of the top traders at our firm gives trading tips and counsel to our newest intern class. Said another way, what this top proprietary trader thought was most important for new traders to get right when they begin. Let's get to work on sharing these important trading lessons so you can grow your trading account.
Just a quick introduction for myself. I've been here S&B since September 2019. I went live in January of 2020, so I've been live now for almost 18 months. I graduated from Michigan in 19, so I'm just 23. I'll be 24 in September, and I'm born and raised in New York. I'll just start off with basically how I progressed throughout my time here and just overall what I've learned. Obviously, when I started out, things became crazy very quickly and was definitely a very fast learning curve because of that. I think that the biggest thing for me that led to a very quick growth period was really just focusing on maximizing each day and not letting one day carry over to the next. For example, when I started out in January, things were a little bit slower, but I definitely had bad points. But in February, when the market volatility really expanded, focusing on just what I could do in each day to push a certain edge that I knew was critical, because those gains added up. There were days where I was making 2 or 3 times my stop, and before you know it, you're getting wrist bump after wrist bump, and you're just mentally adjusting to that fast growth. So that was key for me.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
I think as well, understanding where your strength is. So for me, it was tape trades. It was just fast in and out moves that I knew was just my style. I'm not a patient person. I know that, and that's something that I'm trying to develop. But there was no point in me trying to push the patient trades early on when I knew that was not my strength. What is going to get my stop up quicker? What is going to allow me to develop? It's really pushing those trades. So if I know that when the market vol is crazy, that's my time to shine, that's where you have to, push it as much as possible, because because you're probably going to have periods throughout the year that is going to allow you to take that next step. So for me, it was kind of that February and March period, and then there was probably a 3-month period where I didn't really grow much. It was just slowly up and down. Then it was the beginning of summer, and then I believe it was kind of a little bit November, December, and it was flatline until AMC GME, and then from March until literally probably just a few weeks ago, I was in just one big holding period. I was probably drawing down March, April, got most of it back in May, but that was a period for me where my edge wasn't there. It was more so me kind of just managing expectations, managing my risks, not letting things get out of hand. Whereas now, let's say there was a big trade in tech this past week, and that was a point where I've now taken the next step and now pushed my risks. So if, let's say, I'm moving between X and Y in terms of P&L per day, now the goal is, given this big win, is to now do X to Y plus 20%, because now I'm more mentally adjusted to seeing those numbers. Once you can get mentally adjusted to seeing those wins and losses, that's when you can really feel more comfortable putting on that size. There's going to be a mental barrier to making and losing 1K. And then once that's gone, it's not going to feel like anything. then it's 5K, and then it's seeing the big 5-figure P&L, which is going to be brutal to see when you see minus 10K and you know that that's a big portion of what you've made. But it's all about progression. When that happens, you want to make sure that you're just taking things one day at a time. Focus on just the next day, finding something that is, in your playbook that you can just put up a green day or at least trade it properly. And before you know it, you will have gotten out of the hole, and just even mentally, if you lose that and then you have 3 solid small win days, you're gonna feel mentally fine probably, and you're not gonna be in some sort of rut that stops you from putting on the right ideas, which for the long term is the most critical thing. I think that the biggest thing to realize is that the first few months and probably the first year, right? It's not like you're really trading with a lot of size or quote unquote real money. The biggest thing is to focus on having the right process, okay? It's not important to make, a ton if your stop is a few $100 or a few thousand, because that's not really where you can capitalize on making a ton. It's more important that you lock down that process that will, when your stop is 20, 30, 50 plus, that's when you can make the real money. And if your process is honed in and you know what to do in each situation, that's what's going to allow you to do that. So take this morning, for example. I walked in down a good amount, but my process was set. I knew that this was a overextended move. I knew exactly what to do in every situation. The first move up, start selling. First move down, start buying. And I was very comfortable. And even though that the numbers were big, that didn't fluster me because I knew that my process was exactly the way that it should be, that over the long run will give me success. And that basically, I think, sums up kind of what my approach has been. I would say that everyone goes through a period of a drawdown. I'd say that I had 2 main periods of a drawdown. One was last fall. I think I lost maybe around 1 to 1.5 stops. And just to give clarity, usually the way that I like to manage my risk is I don't like to usually draw down more than half of my stop. That's more so now because my stop is more and it's just mentally getting used to those bigger numbers. And then between March and April, I think I was down around 3 stops. So obviously something that was more significant, not anything that one trade could fix, or 2 trades, or even 1 week. I mean, I was mentally fine with realizing that it would probably take me a couple months. It ended up only taking me 6 weeks, right? But as long as you can just kind of keep your mental strength, that's going to be the biggest factor that's going to force you to not blow up. Because, I mean, the last thing you want is to spiral. Because once you spiral, you might risk your job. Right? If you lose 10 or 15 stops and you have no track record, you're gone. I mean, why would they keep you? That doesn't make sense, right? It's important to show responsibility and maturity throughout those periods, and then you'll be fine. So yeah, what questions do you guys have for me?
I remember last summer, some of the guys that were virtual, we had Discord calls all the time, and that was the airlines and cruises, all those tape plays. How did you go from purely tape trades and scalping and all that? Obviously, when the market slowed down, how did you go from those type of trades to the patience, bigger picture ideas?
Yeah, so I would say 1, it's been also with the people that I'm working with that have exposed me to new style of trading. 2, it's just understanding what works. So if the VIX was at 40 or 50, those trades would work. You would get massive moves very quickly. That's where that edge comes into play. If the VIX is at 20 or 25, and the range in SPY is $3, how do you expect any momentum to really work? Maybe 1 in 10 breakout trades work cleanly, but the rest are not. So so basically understanding what is going to be a higher probability long-term setup in that situation is the biggest thing. And as well understanding a time of day. Those trades work during certain periods for me, but I know at separate times, there's no point in doing them. And if I am, I'm using super small risk and just trying to build some cash flow because I realize that it's not worth me losing any portion of my day on a very subpar trade.
So I have a question about scalability.
Yeah.
So you scaled super fast, right?
Yeah.
And so you talk about mentally getting adjusted to risk bumps and to higher risk.
Yeah.
Did you have a process in place to kind of get mentally acclimated when you got risk bumps, or was it just this is?
I think that the biggest focus as well is also trying to not draw down that much. So kind of going to that 1 day at a time. let's say you made 10K in 1 month, your new stop is 5K. You stop out. Don't just go and stop out the next day and the following day and screw up like your like mental state. Instead, focus on just being responsible, and just because like you have a new stop doesn't mean that the first trade that you do has to use 40% of that risk. Like when I've pressed, it's usually because I'm doing well, I'm in the zone, and if I give back half a stop or 1 stop, it's not gonna like mentally screw me up. Like if let's say like this week I'm up like 3-4 stops and I drew down this morning 1 stop, I'm more mentally fine than if I was kind of flatlining or slowly drawing down and then like giving it up. Like if let's say like this was the end of April and this was the exact same situation, I probably would not have pressed it as much because I realized where am I bigger picture in terms of my progression and what would this do if I went all in. I'm not sure if that's exactly the right approach, but that's just what I took.
That makes sense. So day one, that's something you're evaluating after you get the response?
Yeah, everyone will naturally focus on the risk bump, but like make sure that like you're not striving for a certain P&L, because the P&L doesn't really matter. It's just a matter of being green and being consistent and developing that process. And sometimes like those trades will surprise you. You have a fantastic swing trade and the market just is a beauty and you end up making 2 times like what you thought, like the second that you wake up. Or you spotted some reversal and the market just went straight back up. And like you can be surprised. As long as the process is fine, the results will probably surprise you in the long run. Yeah.
So I know you've been incorporating options a lot into your trading.
Yeah.
Are you typically more just long options or doing other things like strangles and spreads and straddles and stuff like that?
So I've done less of that. Actually, put one on, but that's a different story. A lot of my options is kind of vol plays. So for example, the big trade for me this week was buying Amazon calls last Friday because it looked to me as though that the market was going to gap up. Amazon had a strong day and it was going right into resistance, long-term resistance. If the market did gap up, Amazon would probably be opening above that resistance, which would then bring in new money, break it out to brand new highs, and the implied vol was soar because of all that volume, and the options were not pricing that in. So like utilizing long premium to make a prediction of a range break is what I've found to be a very profitable strategy for me, because it's a low-risk way to put on a gap play. Like if I can find something where I feel like the risk, and the options is the same as a stock, but the options have a much greater reward, it seems like a no-brainer. There are other trades where I want to be able to be more flexible, PM and after hours, therefore options doesn't really make sense. Those would be more low float styles where I'm not looking to hold the position, like let's say, into 9:30. I think that shorting premium is definitely a strategy where you can be shorting spreads. That would be something I would look at in a higher VIX environment where I'm trying to make a reversal prediction. Let's say SPY is going down 3 straight days, the VIX goes from 15 to 30, I'll just go and sell a put spread because it's a way that I could leverage up that reversal while also putting into place a vol idea.
I guess during those time periods of drawdown, did you change anything about your process or did you just lower your size?
Lower my size. I think also being more selective is key. So for example, if let's say now I see a certain tape trade like midday, I might give it a shot. I'm like, all right, this looks kind of decent. When drawing down, trying to force myself to trade less frequently. And there were days where I would put on only a few trades, and now I'm doing way more because I know that in a drawdown, my mental state, I don't want to be taking so many scratches throughout the day, even if it's just a few bucks 50 times. It's gonna just mentally wear at you, right? And you want to try and limit that. You want to try and have as much positive reinforcement as possible. I would much rather, when I'm down, find 1 or 2 trades that I love and press it with the overall same risk than try 5 different things and feel like crap 3 times out of 5, and then kind of feel like I'm just in that same mental cycle, right? Trying to find a way to regain my confidence, because trading is a big mental game. So trying to figure out what you can do to improve your mental state is key.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.